Don't be fooled. Not everything is bad. Stop making moves because of false tells, things that mean nothing or things that look negative, but are actually positive when you do a little digging and some thinking. If you let yourself get shaken out, you're liable to miss terrific moves like today, where the Dow jumped 515 points, this would be gain 0.54, and NASDAQ climbed 0.56. Worst, you're passing up chances to buy great stocks at lower prices. If you just want to forget about the averages, think about individual stocks. Why don't we start with last night? Last night, you know what? It was a textbook case of the Sunday scaries. I keep seeing this happen. You know, I watch the S&P 500 futures like a hawk. Not just because I write my Sunday think piece for CNBC Investing Club members, but because they're so often wrong. And I want to warn people that there could be some terrific buying opportunities obscured by these futures. We had a strange timeline on Sunday night. The futures opened about flat, but then they collapsed. Why? The only thing I could find was a nosedive in oil and natural gas, as well as gold, silver, and crypto. Every article, every snippet of news last night told us that our stocks would go down because they tracked the weakness in those commodities. It was presented as an ironclad tie-up. Problem is, it's completely bogus linkage. It's just plain wrong. Why don't we put things through some common sense? We'll kind of use like a filter, okay? Oil has been going up because of tensions with Iran. These tensions diminished as there have been some communication between us and the Iranian government this weekend. A meeting is now set between White House envoy Steve Witkoff and his counterpart from Iran. It seems like there could be some sort of dialogue that can take war off the table. It's good news for 340 million Americans that oil fell 4%. Good news, not bad news. Natural gas falling more than 25% today, its biggest one-day decline over 30 years, a function of more orderly distribution of gas in this country. After all this built out of pipe, America still has a very flawed distribution and storage system, struggles anytime we get hit with a nationwide cold snap. But now we've gotten our act together, at least this weekend. This decline is fantastic for every home that's heated by nat gas. When oil and gas went up, we thought they'd hurt the economy by putting pressure on the consumer. Higher energy prices were considered bad. So when they both reverse, how the heck is that bad, too? Of course it's not. It's positive. But the journalists and the traders they quote either don't understand that or they wanted the market lower. Both are irresponsible. How about gold and silver? Okay, these have been the subject of intense speculation, mostly by Chinese investors, by the way. These speculators were apparently undercapitalized, using too much leverage, lots of individuals. I'm not that focused on gold, as the rising price only hurts new jewelry. The existing jewelry actually goes up in value. There's a lot more of that. Positive. Silver's not as precious, but it has more industrial uses, solar panels, electric vehicles, batteries. The rally in silver jacks up the price for all sorts of electronics and electronic vehicles. Expensive silver is a clear negative for the economy. On the other hand, a rapid decline is terrific for the economy. So why would you sell stocks on a rapid decline? How about crypto of all kinds? And there are many different varieties if you go to CoinDesk, as I do. When you see crypto up, that means there's less money going into its competitors, the stock market. Again, thinly capitalized players have sent it down. The only real fallout might be severe strain in a company called Strategy, which has bought a lot of Bitcoin with borrowed money. Strategy reports this week. I don't know how exposed it is. But again, I'd rather have the money come into the stock market. Robinhood and Coinbase, which do a lot of crypto business, have seen their stocks get hurt. But those are actually levered to volume, not the price direction. So it's actually good for them, unless there are so many clients on margin to get wiped out. To recap, the reversals we got this weekend were in every single case positive, not negative. The S&P futures should have been higher, not lower. They were just clearly wrong. It's okay. People make mistakes. But I question the verbiage around it. This morning we had disarray because of those same futures. They pulled down everything. If you knew that these negatives were actually positive, you would have been able to buy a host of stocks on the cheap, like the semis, the retailers, the banks, the data center plays, the transports.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.